Welcome everyone to the Introduction to U.S. Taxation course. Over the next few weeks, we'll delve into the essentials of the U.S. tax system, providing you with a solid foundation. We'll cover various types of taxes, the tax filing process, and key tax planning strategies. Today, we'll start with an overview of the system, including its history, key authorities, and basic terminology. Let's get started. Overview of the U.S. tax system instructor. The U.S. tax system has evolved significantly since its inception. Initially, taxes were minimal and primarily generated from tariffs. However, the modern income tax system was established with the 16th Amendment in 1913, allowing the federal government to levy taxes on individual incomes. The Internal Revenue Code, codified as Title 26 of the United States Code, is the primary body of domestic statutory tax law. Today, the system includes both federal and state taxes. Federal taxes are uniform across the country, while state taxes vary by state. Types of taxes in the U.S. instructor. We categorize taxes into two main types, direct and indirect taxes. Direct taxes, such as income tax, are paid directly by individuals or organizations to the government. Indirect taxes, such as sales tax, are collected by an intermediary, like a retailer, from the consumer. Notable sections of the IRC include Section 1, which imposes the federal income tax on individuals, and Section 11, which imposes the corporate income tax. Key tax authorities. Instructor. The Internal Revenue Service, or IRS, is the primary federal tax authority responsible for administering and enforcing federal tax laws. Each state has its own tax agency that oversees state taxes. For example, California has the California Franchise Tax Board, which administers personal and corporate income taxes within the state. Local governments may also levy their own taxes, such as property taxes. Let's go over some key tax terms. The taxpayer refers to any individual or entity that is obligated to pay taxes. The tax year is the 12-month period for which tax is calculated, typically the calendar year. Filing status affects tax rates and eligibility for credits, with options including single, married filing jointly, married filing separately, head of household, and qualifying widow or widower. Understanding exemptions, deductions, and credits is crucial for reducing your tax liability. Exemptions reduce your taxable income, deductions reduce your taxable income further, and credits directly reduce your tax bill. Who needs to file a tax return? Generally, anyone with income above a certain threshold must file. For example, single filers under 65 must file if their gross income is at least $12,550 in 2021. Key forms include the 1040 for individual income tax returns, the W-2 for reporting wages and salaries, and the 1099 for other types of income, such as freelance work or interest income. The IRS website is a valuable resource offering publications, tools, and forms to help taxpayers. Tax software such as TurboTax and H&R Block can simplify the filing process by guiding you through each step. Professional help from tax advisors or accountants is also beneficial, especially for complex tax situations. That concludes our introduction to the U.S. tax system. For your homework, please read IRS Publication 17, which covers the fundamentals of federal income tax, and prepare a list of questions for our next lecture. Thank you, and see you next time.